Hey everyone, I'm Ray Burkhalter, co-founder of REI Funding Partners and managing partner of Renovate the State Private Lending Fund. For nearly 2 decades, I've been involved in private lending, and I'm really excited to share some insider information with you here in this video series. We'll walk through exactly how private lending works and why many sophisticated investors use this strategy to generate recurring income from real estate loans. Each video in the series is short and informative. We hope you enjoy learning more about private lending here. Thanks.
Have you ever heard about a loan with a 12% interest rate and just thought to yourself, who on earth would sign up for that? It's a totally fair question. And the world of private lending is full of these numbers that can seem, well, pretty surprising at first. We're not just talking about a small difference here. Borrowers are often paying rates around 10%. And in some cases, that can climb even higher, to 12% or, you guessed it, even more. So yeah, that brings us to the big question. Why? Why would a smart business person willingly agree to pay that much? I mean, on the surface, it sounds crazy expensive. But once you understand how professional real estate investors work, the answer becomes incredibly clear. And honestly, it's pretty smart. Okay, the first and most important thing to get is that you have to completely shift your perspective. For these borrowers, a loan isn't a personal debt like a car loan or a credit card. It's a tool, a strategic business tool, plain and simple. See, they're not borrowing money to buy a new TV. They're borrowing business capital. The entire point of this money is to run a business, in this case, real estate investing, and the goal is always to generate a profit. It's the classic fix and flip model we've all heard about. An investor finds a property that needs some work, they use the loan to buy it and fix it up, which pushes its value way up. Then they sell it. That gap between what they bought it for and what they sold it for, that's their profit. The loan is just the key that unlocks that whole process. So why a higher interest private loan instead of just going to a regular bank? Well, it really boils down to 3 huge benefits that traditional banks just can't compete with: speed, the profit potential of the deal, and flexibility. Let's kick off with speed, because this is a big one. In a competitive real estate market, the best deals do not stick around. A traditional bank, they can take weeks, even months to get a loan approved. A private lender, on the other hand, can often get the money wired in a matter of days. That speed isn't just a nice to have, it's a weapon. It's the difference between landing a huge deal and watching someone else get it. Okay, next up, profit. This is where it all starts to click. Let's just walk through a really simple example. Say an investor buys a house for $200,000. They put $50,000 into renovating it. After all that work, the house is now worth $320,000. That's a potential gross profit of $70,000. Now, all of a sudden, when you're looking at a profit that big, the cost of the financing starts to look like a much smaller piece of the puzzle, right? And that is the whole point. For a pro investor, their main focus isn't the interest rate. It's the size of the opportunity. If the potential profit is big enough, then paying a bit more for the financing to make it happen is just a smart cost of doing business. The opportunity is simply way bigger than the interest cost. The third huge benefit is flexibility. You know how banks are. They've got these super rigid checklists and rule books. If your project doesn't fit perfectly into their little box, you're pretty much out of luck. Private lenders, though, can look at the big picture. They can do a more holistic review of the deal itself. This means they can look at things a bank might just ignore. Things like, does this borrower have a long, successful track record? What's the real potential of this property after the renovations are done? They can look at the unique structure of the project. It's that flexibility that opens the door for deals that traditional banks would never even consider. Okay, so we've talked all about why a borrower would pay these rates, but that's only half the story. What about the other side of this deal? Why are investors lining up to provide the capital for these loans? The answer is actually incredibly simple and very powerful: interest income. Those higher interest rates the borrower is paying, they translate directly into a steady stream of income for the investor who funded the deal. And here's how that flow of money works. An investor provides the capital for the loan. The borrower takes that money and gets to work on their project. And as they do, they make those monthly interest payments back to the investor. This creates a really consistent, recurring source of income for that investor, and it's all backed by a real, tangible asset, the property itself. So when you step back and look at the whole picture, you realize this isn't some lopsided deal where one person is taking advantage of another. It's actually it's a symbiotic relationship. Both sides are getting something they really need. Let's just boil it down. The borrowers, the real estate pros, get the fast, flexible money they need to jump on profitable opportunities they'd otherwise miss. And in return, the investors who put up that money get a consistent stream of income that's backed by real estate. It's a classic win-win situation. So, that leaves us with one final thought to chew on. We started this whole thing by asking why someone would ever pay 12% interest. But after looking at all this, maybe a better question is, if a loan can be such a powerful tool for a borrower to build wealth, could providing that same loan be an even better investment? Thinking about that, well, it can change how you see money entirely.
Thanks everyone for watching this video. We hope you really enjoyed the content in this series. Be sure to check out the next one in this series to keep learning how private lending works. And if you'd like to go deeper, you can download the free guide in the video description. Till next time, take care and God bless.